Wheezy's on the tube?
Wheezy's on the tube, man. Wheeze on the YouTube today. Pull up the rates right away. Things are not looking good in the history of mankind.
Not so bad. There's been worse.
You think so?
There's been much worse.
Think so, huh?
Welcome, everybody. You're here to ask us home loan questions, program questions. Why is that happening?
You should be on D&D, man. Don't you?
It is. That's what you don't know. That's what you don't know. That's the problem. All right, guys. Ask your home loan questions, program questions. What does it take to buy a house? What does it take to buy a second house? What does it take to buy an investment property? What does it take to buy your first property?
What are the rates at today? Do you want to be a loan officer? I don't know if that's such a good idea right now.
It's tough. It is tough.
Yeah, so we're here to help you buy a house in 2024. Even though the rates are not the best, it is a buyer's market. No question about it. It is a buyer's market. Why is it a buyer's market? Because there's fewer buyers that can qualify. And because there's fewer borrowers that can qualify, buyers, that means that these guys actually have the run of the show. They get to choose which houses they want to buy because it's a buyer's market.
Likes out of the gate. I'm loving
appreciate you guys. Thank you very much. We appreciate
your help.
We do look forward to talking to you every single day, answering the questions, helping you get a house in 2024. What do you got for me? What's the new news in the mortgage biz?
Well, before I get there, I want to let you guys know that buying a house isn't that difficult. Started out the gate. Screenshot this if you're interested in buying a house so you can reach out to one of us. And if you're interested in buying a house right now, you don't even want to talk to us, you want to skip that part, we will call you when we're done. Go to the link up top in our bio, click on apply for a home loan now and get your process started. But what was your question?
I don't know. I forgot, man. That was yesterday. You got to keep up. You got to keep up. Today's rates are 5.875. 5.875. What? Don't believe me? What? Do we have loan officers in here who are challenging me, saying it ain't 5.875?
Please do.
Do we have them saying that it's not 5.875? I do loans all day long. It is not 5.875.
I thought you said it was a tough market,
Mr. Loan Officer that is challenging me on my knowledge, go to the top link here, go to Cool Stuff. You'll see today's rates. You'll see what I'm seeing, 5.875. Now, the next question should be, hey, but there's a buy down. Yes, there is. Yeah. And it shows up in the APR because the APR is 6.389. That's the APR. So, what's the FHA? 30-year fixed. 6.0. Oh, no, it's not 6.0. I'm pricing people all day long at 6.8, 6.99. It's not 6.0. I'm like, well, you got to go back up to that link, and you'll see that it is 6.0, but the APR is 7.22. What? Yeah, that means you're buying it down. That's what the APR. The APR is a real quick way to decode whether or not you had to pay points to get that better rate.
Oh, vote for Pedro, man. This is very common. He said, or she said, it said, "Good morning, gentlemen. Why am I getting bombarded by calls after pulling my credit for a mortgage?"
Oh, you're going to love the answer to this, and you're going to hate it at the same time. Here's why. And we fight. We've been fighting. Our bank's been fighting. Here's what happens. TransUnion, Experian, and Equifax, they are a for-profit organization. Wait, what? Yeah, they're trying to make money.
Get money.
But wait a minute. They're a credit reporting agency.
Get money.
They are trying to make money. They're trying to make money. And one of the ways that they make money is if Lee, I get to pull your loan. I'm like, hey, let me pull your credit. They know I'm a loan officer because in order to get their service, I have to license myself as a loan officer. They know I'm a loan officer. So guess what? If I'm pulling somebody's credit, this guy's probably looking for a mortgage. Probably. Cool. They got all the data. They're trying to make some money. They say, hey, all other loan officers that aren't Lee, would you like to buy this? I'll sell it to you for 20 cents. So all the banks across the country are going, you know what? That guy's looking for a mortgage right now. I want that. I'll try it. They're called trigger leads. Horrible.
They're called bottom feeders.
Yeah. Horrible way to deal with the market. But it is. We've actually gone through and said, hey, listen, this is a privacy issue. They're like, no. You subscribe to our service. And we are a for-profit organization. And because of that, if you do this, you inside of our terms of service, we can sell the inquiry. And they do. They're called trigger leads, and there are loan officers all across the country that are buying it. And then for the next 24 to 48 hours, the clients that we put in get hounded with calls. We try and stop it. There's some things you can do. It's just a horrible, unfortunate part of life. That's
you know what they say.
Yeah. What do they say?
I was hoping you knew. Victoria Smith, how you doing? Thank you for chiming in. Everybody asks questions. We're going to get to every single one of you, but let's go with Victoria Smith. Can a person with 3 late payments on a past mortgage get approved with an LOE to possibly get approved?
How long ago were the 3 late payments? That's the big question. Victoria Smith, there's a rule that says if you have 1 late payment and a good LOE in the last 12 months, I might be able to get you through. On most loans, by the way, most of them.
Yep.
It is going to hurt you.
Yep.
If you have 2 late payments, they don't give a shit what the reason was. They don't give a shit. Yeah, if 2 late payments on a mortgage. Now, if you had 2 late payments on a credit card, we might be able to get away with an LOE and some other things. Now, if they're over 12 months, then you can have 2 late payments and we need a good LOE again. So sometimes we wait till one of those late payments is on the 13th month and then the other late payment is on the 12th month, and we make sure we close escrow right in there. So it's a strategy, but 3 late payments on a mortgage, difficult.
Yeah. And how long ago? Answer that question, Victoria. We want to help you. TJ651, is a FHA possible on an $800,000 home?
All day, every day, depending on where you live.
Yeah. What does that mean?
All day, every day, depending on where you live. Okay, so here's a shocker. Different markets have different criteria. So if you live in Mena, Arkansas, which is a nice little town in Arkansas, you're not going to get a $1 million loan limit. You're not. But if you live in Los Angeles, which is a very big market, $1 million is within reach.
You can go to $1 million on FHA.
Yeah, $1 million.
Certain cities and counties in the area.
$1 million.
Yes.
Yes. So yes, depends on where you live.
Christian Noel, happy Friday, guys.
Christian
Happy
Noel,
Friday
we are great to see you. Thank you for showing up. We appreciate you very much. If you got good questions for us, Christian,
she does.
Chime in.
She does. If you're selling our current home and putting 20% down on our new home, is it smarter to put a lower down payment, or will it go to for lower payment, or will it go to interest as well?
Okay. So, Christian, it's going to depend on, 1, the type of loan that you're getting, and 2, your FICO score. Whoa, that's a lot. Let me tell you why. Here's why. Because we're going to go in deep. You're about to get an education. You have to probably take notes so you can teach your loan officer, because your loan officer probably doesn't even know this. Okay? So, if you go conventional, I'm just going to go a conventional 5% versus a FHA 3.5%. So if you've got an 800 FICO score and you go with the conventional 5%, your MI is going to be very cheap. And I'm just going to guess 0.21, 0.22, okay? 0.21, 0.22. So your mortgage insurance is going to be very cheap, okay? That's important. If you go FHA, 3.5%, your mortgage insurance is going to be 0.55, which is more expensive than 0.22. So FHA, more expensive MI. Okay? All right, cool. Now, if you have a 620 FICO and you're just barely crossing the line, your MI can go very high. I saw one the other day, 3.7. I'm just going to say 200 basis points. Instead of 0.21, instead of 0.55, your MI is now 0.2. That becomes very expensive, very expensive. Now, why is this important? It's important because if you're trying to avoid MI, you do put 20% down, and that'll avoid MI. But it's not a question of whether you're going to refinance. You are going to refinance. You are going to refinance. So if you're locked in right now, let's just say we locked you in, you're going for a nice, expensive house. We got you at 7.99 on a conventional, 7.99 on a conventional, or 7.45 on a FHA. Well, if you're locked in and you put 20% down, you can get rid of the MI, and that'll help you a little bit. But it'll remove a lot of your cash, like a lot of your cash. So if you have a high FICO score, a very high FICO score, I can make a great case for you should be putting 5% down and save that extra money so that when you do refinance, you can spend 20 grand to buy down your rate into the low amounts out there. So it's a very complicated scenario, but we can help you out with that.
Absolutely. I appreciate every single one of you that are hanging in there, asking the good questions, the people that watch us, the people that are getting value from us. We want to provide you guys with value. So ask the hard questions, just like Taco Dom over here. And I also want to ask you guys for a favor, just a favor. We need to get to 10,000 likes. So just start tapping away on that screen if you think we're bringing you value, because we want to know. That's how we know we're bringing you guys value.
Appreciate you guys very much. Go all the way up. Don't want to skip any questions,
Dude, don't even try me today. It's Friday.
Okay.
All right, Victoria Smith, we had, had 3 within 6 months. I figured, my poor clients. Victoria Smith, don't let that stop you, okay?
Yeah.
Let's take a look at the file, pass your clients over here. We'll do our little investigative services, and we'll point them in the right direction if it does not pass the test, okay? Henry the Roofer, pros and cons on a HELOC.
Okay, so the pro is you get money. That's it. That's the pro. All right. The pro is you get money. There's the pro.
Get money.
That's it. Yeah, get money. You got money. You can do whatever you want. You can go buy ices at 7-Eleven if you want.
Love those.
Yeah, you can buy.
Don't eat too many.
You can buy snow cones.
Love those too.
You got a lot of money. You can buy whatever you want. That's the pro. The con. You got to pay it back. It's going to cost you some money, and it's going to limit all your other buying shit because it's going to show up on your credit. HELOC is like a credit card. HELOC, home equity line of credit, like a credit card, but uses your house as collateral. So first we approve you for a HELOC. Let's say you approve for $50,000. You're approved for $50,000. Does that mean you have to get $50,000 out? No, you can keep it at zero. Never take anything out. You're just approved for $50,000. But the minute you want to go buy a new Lexus and you need 50 grand, you can just swipe that credit card and you have 50 grand. Now here's the problem with that. 2 problems. 1, tied to the house. So you're not getting out of that. There's no way you're getting out of that HELOC. 2, interest rates are very high. Interest rates are very high. You know when I told you that interest rates are 5.875? That's for your primary residence with the great FICO score. On a HELOC, if you're lucky, you're in the 9s. If you're lucky, you're in the 9s. So, not lucky, all the way up to 15. I've seen them up to 15. But the pro is you get money.
Yeah. So Lance Elliott, get money.
Get money.
Crystal 1983. If my purchase price is less than the approved amount, can I take out extra for repair?
If my purchase price...
That's actually a really good question.
That is a very good question. Less than the approved amount. So the approved amount is cute. It's cute. The word you need to know is appraised amount. Because I could approve you for 500 grand. If you're looking for a $300,000 house in a $300,000 market, they're not going to give you an extra 200 to go party with, buy Sea-Doos in a boat. That would be stupid of the bank, wouldn't it? Yeah. Cool. But you know what they will do? Let's just say we did go for that $300,000 house, and it appraised at $300,000 house, but you went into contract at $280,000. We'll lend you up to $300,000 as long as it's built correctly with a good realtor, and that's called stacking costs. We'll be able to stack the closing costs, stack a lot of different things, and be able to get you the amount that the deal has. But in no scenario are you going to walk out with money to go buy ices at 7-Eleven and snow cones. Ain't going to happen. It's illegal.
Yep. Oh, actually, Henry the Roofer asked about HELOCs.
Okay.
Lance Elliott is asking, what are some pros and cons of rehab loans?
Rehab loans. So, pro, you get a loan to rehab your property.
Yeah, so get it off the crack.
Yeah. So, that's the pro. You get a loan to rehab your property.
No more meth.
Meth?
Yeah, it's rehab. Right?
All right, cool, whatever.
Celebrity rehab?
So, yep, got it. So, that's the pro is you get money to rehab your property. The con, it's a loan, and it's not easy to get. If you have an FHA loan, there is one called a 203K loan that you can plug into an FHA loan that will give you some money, but it's not easy to get. Why? Because they're afraid you're going to go buy ices and snow cones or wave runners and boats.
And are fun.
Those are fun. They're a lot of fun. So, but they don't want you to do that.
Nope.
So in order to do that, you have to have a contract manager, general contract manager, someone who's putting it all together, bids from everybody, quotes from everybody, and then the money goes into this escrow account that pays all these contractors in order to do the rehab so that the loan is actually done for the rehab that it was issued for. So, there's the con of it, and it's more expensive. That's another con.
Yeah, but if you can get through it, and if you have a contractor that can actually get the case manager what they need, because you're assigned a case manager, and they're going to manage all the funds to make sure you're not buying ices. So the contractor has to provide a lot of documentation, licensing, fill out this form, fill out that form, and that's where a lot of the stops come from, is the contractor, because they're good at swinging hammers and making their kitchen beautiful. They're not very good at paperwork all the time.
That's
so that's
usually
a big deal.
Yeah, that's a problem.
Yeah.
They're not easy, by the way. The loan officers do not like 203K loans. Nobody does. No, we don't like one-time construct loans. We don't like them because there's too many variables that can go wrong. The contractor is a very important person in a 203K loan. And if they do it wrong, the whole loan falls apart. And the one-time construct, if the contractor doesn't budget correctly, the whole thing falls apart. And who's left with holding the bag? Kind of the bank, kind of the borrower. You know who gets to go away scot-free? The contractor.
Yeah. Crystal 1983. We already answered that one. Miss Carnell. Why are conventional loans better but have to put down a higher down payment?
Miss Carnell, they're not necessarily better. Sometimes FHA is better. A lot of times FHA is better. A lot of times. Miss Carnell. I feel like I'm talking to my teacher, my 6th grade teacher.
Are you a 6th grade teacher?
Miss Carnell, can I tell you why conventional loans are not always better? Miss Carnell, it's going to depend on you, because if you've got an 800 FICO score, Miss Carnell, well, if you got an 800 FICO score, conventional is probably a better loan. If you've got a 622 FICO score, you're probably better off with FHA. FICO score is a very, very important part of a loan, because there's something inside of there called MI. Both loans have MI, unless you put 20% down or more. Mortgage insurance. And mortgage insurance is to protect the lender, the bank, in the event that the borrower defaults. Well, how do we mitigate that risk with FICO score? Because FICO is, how have you been paying your bills for the last 10 years? If you've been paying them pretty damn good, then the odds are you're going to continue to pay them pretty good, and the insurance for you is not going to be very high. It's going to be very low. But if you have a 622 FICO, your MI is probably going to go through the roof, and you're probably better off with an FHA. So be careful saying conventional is always better, because it's not.
Once again, guys, we're trying to get to 10,000 likes. Help us get to 10,000 likes today. We're trying to bring you value. If you think we're bringing you value, tap away at that screen. If we're not bringing you value and we're junk, well, we'll decide maybe we won't come back because it's garbage. But that being said, we want to bring you all the right answers. Even if you don't like them, we want to give you the right, raw answers. User, whatever, follow the host. Thank you for the love.
Thank you. Appreciate it.
Alfredo Garcia, saludos, familia.
Dude, we're going to get banned.
Hey,
You're going to get banned. We're about to get
in
banned.
Me.
We're going to get
Lance
banned.
Elliott, my bank has an option to buy a house and get quotes and then loan 85% of the completed appraisal. Dad is a show off.
Yeah, dad
He
is
has a
contractor.
dad.
Yeah, you have a dad. Yeah, we don't have dads.
Show off.
I know.
And he has a job.
Dad is a contractor, and you have a job, and you can speak English. This is all good shit, man. This is good
Fantastic,
shit. Yeah,
Lance.
just we're about to get personal. It's gonna hurt him a lot.
A lot.
His dad walked away when he was how old?
2.
2 years old. My dad walked away when I was 3.
You're a show off too.
Yeah, so Navy Mom, we haven't seen you, Navy Mom Donna, in forever. Great to see you. Great to see you.
What was that, Chris? What was what?
Yeah, we were just talking about how his dad walked away when he was 2 years old. He's just like, peace, I'm not going to be around for you, dude.
Well,
Yeah. Yeah.
I can't walk that fast. You want to leave me?
Yeah, like that. Mine walked away when I was 3. This guy over here, Lance, is like, hey,
Still
I
has
have
a
a dad. He's got a job. He's a contractor. He's able to do shit.
Anyway, so the bank that buy the house quotes and then loans 85% of the completed appraisal. Okay, so is that just a statement, Lance?
Yeah.
Question?
So
Not
the
sure?
bank, that's usually a private bank, by the way. That's a smaller bank. It's a community bank that does that kind of thing. Because we work for a big bank. They don't have these little tiny proprietary sectional loans. We work with FHA, Fannie Mae, Freddie Mac, VA, FHA, USDA. There's a few others. We do have some alt QMs, but the alt QMs are usually like really weird scenarios. Hey, I made $2 million, but I only reported 40 grand. Can I buy a $2 million house? Prove to me you made $2 million through your corporation. I probably can do it. There's things like that. But that is a very unique situation to you. Good job, Lance.
And the fact that your dad is the contractor, getting through the 203Ks or those rehabs, having to deal with the case manager is going to help a ton.
Ton.
This thing's jumping on me.
I know, we got a lot of questions.
Nielsen Frederick, can underwriters see my business line of credit and credit cards if I'm buying a primary residence?
Maybe, Nielsen. Maybe. Depends on, are we using tax returns? And are you filing 1120s and K1s? Because if you're filing 1120s and K1s, that's going to show up on your 1040. That's a little technical, but 1120s are the business corporate tax returns. K1s are how they flow through. K1 income hits your 1040, but doesn't have to be all the income. Sometimes there's money left on the 1120. If you're 100% owner through the K1, I'm allowed to use the business income as your income because you're 100% owner. In that situation, underwriter's going to see your lines of credit.
There you go. Crystal 1983, I want to use my VA loan. And then PU. I don't know what PU is.
Sounds like he smelled something bad.
PU, man.
PU.
All right, well,
hey,
Crystal,
we want to help you. Use your VA loan.
Yeah.
VA loan is probably the most powerful the loan in the system. If you're a veteran, there's only one real downside to a VA loan. Only one real downside. One real downside. That's called a VA funding fee. If you're service connected at 10% or greater, we can waive the VA funding fee. You need a loan officer that knows what they're doing. There are sometimes people will say, hey, well, what about the termite? That's a flaw in the VA system. I'm like, no, it's not. It's making sure that the veteran does not have termites in the house, and it's mandated by the VA. Yep. You think that's a flaw?
Nope.
I think that's a plus.
I love it. The VA is a little more strict on the appraisal, which is better for the buyer, you guys.
Yeah.
Camila, question. I got my loan estimate for a house, but the closing costs and monthly payment amount is way higher than I was told. What is that?
That sounds like you were told something, but when it actually turned up in writing, it was not what you were told. That's what that sounds like, almost verbatim, Camilla. Mm-hmm. And there's probably reasons for it. There's probably reasons. Let's hope that one of the reasons is your loan officer hopes you're stupid and you don't catch it, because it sounds like you caught it. Yeah, let's hope that that's the reason. Yeah, if you want us to give you a second opinion on this, shoot us over an LE. If you want us to compete with it, shoot us over a locked LE, and we'll tell you whether we can beat the deal or not. By the way, rates are going back up over the last few days. PCI just, or CPI, which one was it? CPI. CPI just came in 2 days ago, way hot. Like way hot for the third time in a row. Scary. Which means the plan for reducing interest rates could be changing. It could be changing. We won't know till Fed Powell speaks. He doesn't speak till May 1st. He will speak May 1st. But if we get another hot CPI, he said real clearly, he's like, hey, listen, I will stay at the top as long as it takes to get this economy under control.
Yep.
And he don't give a shit if we don't make any money, if the realtors don't make any money. He don't give a shit whether you can't buy a house or not. He don't give a shit. He got to keep this economy in check.
Absolutely.
Cool.
And also, Camila, just to let you know what he just said, maybe you got quoted before the fact, and now you're getting the estimate after the fact. Rates could be higher, costs could be higher, a lot of different factors. But let us take a look, and we'll inform you, okay? Yeah. Camacho in the house!
What's up, Camacho?
Can a cosigner be approved if their work is contracted? Can a cosigner be approved if their work is contracted? Got it.
Oh, got it. So if they're an independent contractor, basically, right? I think that's the word.
Yeah.
So if they're an independent contractor, the answer is maybe.
Likely.
If I have a 2-year history and will report it to the IRS and I pay taxes on it and there's a net positive, yes, we can put them in there.
Boom.
Yes.
2-year work history, guys. Miss Carnell said, okay, Alfredo Garcia laughed at me.
I think because you have no dad.
I'm okay with that.
He's like,
I'm
you
okay
got no
with
dad. This guy's heartless, man. He's like, you got no dad. You probably couldn't afford ice cream when you were growing up and a kid. You probably couldn't.
Lance Elliott, don't worry, you guys know mom. My bad.
Cool. Oh, dude.
My bad. I have my mom. I love her very much.
I love my mom too. I got my mom. I got blessed. Yeah.
Lance Elliott also. That was the follow-up on my rehab question. Oh, okay, cool, man. Right on. Victoria Smith. With a Chapter 13, can you do a cash-out refi to pay off the 13 plan?
Ooh, Victoria, you're like, hey, Mr. MasterCard, I want to pay off Visa. Can I borrow some money to pay off Visa? Hey, Visa, I'm borrowing some money to pay off MasterCard. You better not tell them. You can't tell them. You can't tell them. Okay, so Victoria, Chapter 13. Chapter 13 is a responsible way to deal with bankruptcy. That means that I'm taking all my debts and telling the judge, hey, I can't do this the way it's set up. Can you help me restructure it so they can do it? That's a responsible way to pay off debt. Now, because of that, the banking system says, if you do it this way and you make it a certain amount of payments and you made them on time, we'll lend you money because you've dealt with debt responsibly. Now, so the first question is, if you're in Chapter 13, how long have you been in Chapter 13? And then number 2 is, if you're trying to do a cash out refi, you better have a lot of equity in your house because most cash out refis stop at 80% LTV, which means if you have a house that's worth $400,000, including your first note and all fees, you're going to only be able to take out $320,000. So you have to take off your first note and fees, and whatever's left, that's what you're going to be able to do a cash out refi on. So there's a few different things that we have to go through. The only exception to that on cash out is going to be VA. VA will go up to 90% LTV, and that's recently. They used to, like a year ago, they used to go 100%, 100%, 100%, but they're like, whoa, we got too many veterans maxing this thing. So they said, we're changing the guidelines, 90%.
Got it, yeah. Okay, guys, keep pumping up those likes. We're trying to get them to 10,000. And guess what time it is, man?
What time is it?
Time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officer, Chris and Lee, at New American Funding by calling the number on the screen. You're going to have to screenshot it because it's going to disappear in 5, 4, 3, 2, 1. Bam. That was special. Facts.
Yeah. Maddie Boo, my third favorite Maddie.
What's
just
up,
got
Maddie?
For $400,000 FHA in Chi-Town, Chicago, but didn't qualify for down payment assistance.
Maddie Boo.
I got
Maddie
some good
Boo.
news
Yeah,
for you.
probably pretty good news. Yeah, pretty good news. Yeah, so if you're qualified for 400K, now you didn't qualify for down payment assistance, that's usually 2 different ways to attack it. One is your FICO score's not high enough, because most down payment assistance programs start at about 640, 660. I think they all unlock at 680. So that's one way to approach it. So it's the FICO score. Or there's another way to approach it. And that is, I was qualified for $400,000, but once they overlaid the down payment assistance program, I'm only qualified for $320,000. You're still qualified, but for way less. Way less. So those are 2 different ways to do it. Now, Chris is about to tell you about a proprietary product that we have at New American Funding in 3, 2, 1, go.
And I'm also going to show you your loan officer a little bit, okay? A little bit, because it's what Lee said. Likely, you do qualify for down payment assistance, but here's a little secret, guys. Sometimes loan officers make less money when they do down payment assistance.
You didn't tell them that, did you?
Make less commission.
You didn't tell them that, did you?
Yes.
You didn't just tell them that?
Yes.
Damn.
Also, it does push down the values. So let's say you're qualified for 400,000 traditional, what you're telling me. You're probably closer to 280,000
280?
down payment assistance.
Really?
Yes. Now, in your market, in his market, I don't know if there's any houses for 280,000, so that's probably the reason why you didn't qualify. But I got something special for you, okay? I got a program that is still FHA that will keep you at $400,000, providing you really are qualified for that amount, and you're able to get the assistance. And it starts at a 600 credit score.
What?
Maddie Boo, there's some good news for you. I don't know why you didn't come to us first, baby girl.
What?
I got the answers.
Dude, you just called baby girl. You're going to get banned.
My third favorite Maddie.
You're going to get banned. You're going to get banned. You're going to get banned.
But if you want to call us, you know the number, you know where to reach out to. If you want to start the application, just go to the link in the bio, click on apply for a home loan now, start the process.
Side note, all loan officers and realtors that are watching us, we appreciate you. We know you're watching us on Facebook, on Instagram, on TikTok, and on YouTube. We appreciate you. We don't hate you. We don't hate you. Come on, talk to us. Give us some questions.
They hate us.
We know. Dude,
You know why they hate us?
I've jumped on, because they ain't us. Wow. Boom. Say, I've actually jumped on other loan officers' lives, and they're like, oh shit, somebody's watching me. I'm like, I don't give a shit. If you really know your stuff, who cares? Who cares? Bring it.
A lot of smart people out there, guys.
Yep.
Camila, definitely thank you both. I will send now because it's ridiculously higher and we're worried to continue and give the escrow money or not. Here's the thing, Camila. You got to keep that transaction alive. Talk to your agent. Figure out when the very last last day is to pull out of that if you need to. But keep moving forward. Even if you put your money into escrow for the deposit and you cancel, you're going to get that money back as long as you have a good agent.
And you can do it for what's called loan contingencies or inspection contingencies. So in California, and it's this way in most states, you have 17 days for regular inspection contingencies, which is pest inspection, roof inspection, floor inspection, pipe inspection, electrical inspection, whatever inspection you want to do. And you go, hey, I don't like the color of the wires in the walls. Cool, you can cancel.
Ugly colors.
Yeah, so then that's 17 days. And then the bigger one is the loan contingency. If I cannot qualify you for the loan, then you can go, I can just say, hey, this client doesn't qualify for the loan, so we have to be able to cancel that contract. So those are the two contingencies, and your realtors will know how to use these if they're skilled.
Thank you guys on Instagram, Facebook, TikTok, and
YouTube.
Yep,
YouTube.
Love that we're getting all over the place, guys. Millions and millions of fans across the nation. Manny Boo again didn't qualify for assistance in Chicago. Do I have other options? We just answered that.
We talked to that, Matty Boo.
Hit us.
By the way, that's a NAF, New American Funding proprietary program. When the banks are big and they make profits, they get to say, hey, I'm going to use this $100 million to help this. And they get to do a project. And many times the local banks will do it for the local area. New American Funding put out a few different plans. One of them is called NAF Cash, where they actually have this big pool of money and they buy the house cash on your behalf. They buy it on your behalf, and then they sell it back to you through a regular escrow. But you can go shopping as cash. So that's one of the programs. Another program is the down payment assistance program that goes down to 600 FICO, and they're using some of their own money. But this is not available to other banks because it's a proprietary NAF program. Now, other banks have proprietary programs too. They get to do whatever they want with their money. This is just a proprietary program for NAF.
And if you're a loan officer here in this feed watching it right now, tell us why you think you're badasser than us. Because I don't think you are.
Badasser.
Badasser. Emma! Still can't convince my fiance to get a house.
Oh, no. Emma, you got to use the power that you got, whatever that is. If you can make a good meal, if you can make a good meal.
Where you going with
I don't know, show up at Roses one day, say, hey, I really want a house. Whatever you got to do. You want a house, beef jerky. Beef jerky works.
He's a man. Some beef
jerky. Yeah, it's a good thing. Buy him a Camaro.
Nah.
Corvette.
Yeah.
Corvette. Okay, cool. Corvette might work. I don't know. Whatever power you got, Emma, you got to use it.
Yes. Mildred Diaz, can you lose your clear to close if the inspection came bad and appraisal good?
Yes.
And you want to get credit? What's that? And want to get credit part?
Okay. Can you lose your clear to close? You can lose your clear to close all the way up to funding. Actually, you funded the deal. It's been funded.
Oh, I get it.
You've been funded. And then they find something that's not good and they go, whoa. We didn't mean to fund that. Let's unfund it. You can do that. We've actually had that happen on a few loans. So they're like, unfunded. Pull the money back. I want it back.
Happened a couple
times. Back. Yeah.
What do we call you? The leader of the pack when it comes to that.
Yeah, leader of the pack.
It happens, guys. It happens.
Yeah.
But she's asking, I think she's saying the inspection came back and there's work that needs to be done and she wants to get more seller credit.
Mm-hmm.
Can you lose your clear to close for that?
Yes, you can lose.
No.
Yeah.
I'm going to say no because that's a negotiating factor inside of that.
Yeah, but it changes the contract.
It does change the contract.
So the contract's no longer the contract.
It will go back into underwriting. As long as they agree, it will go back into underwriting.
Mm-hmm.
And underwriting is just going to apply more credit. If you already had a clear to close and you got more credit, you should be fine. That's what I'm saying.
But what if it's like a foundation crack on the inspection?
So, Mildred, elaborate on that.
Yeah.
Is it like a deal killer or is it just work that you want to be done?
Because like if we found a foundation crack, I don't care what you.
I'd make you cancel it.
Yeah,
That's not a goodbye.
Yeah, but you will cancel on a clear to close. You will cancel on a clear to close because that house is going to break in half at some point, and they don't want to own it when you do. The bank doesn't want to own it when you do.
Kate 45 Park. Does a 606 FICO qualify for an FHA and down payment assistance in Washington?
Okay, so for most, Kate Clark, probably not, but New American Funding has only one. It's the only program I've actually seen
that I've ever heard
that goes down to 600 FICO on a down payment assistance program. So it does have to ride on an FHA chassis, which means you qualify for an FHA loan and then we put the down payment assistance program on top of it. But ultimately, you're in a house with a down payment assistance program. The only one I know of is New American Funding. And I talk to my loan officer friends all the time. I'm like, hey, you got this, you got this, you got this. And sometimes they'll say, hey, I got this special thing for electricians. I'm like, okay, cool. I'm like, hey, I got this one down payment assistance program, $600. They're like, $600. I'm like, yeah, I don't get it either, man. But NAF is putting some money behind it, and we're able to do it. So good news.
Yeah.
So yes, call us. We'll help you.
All right, I love it. Victoria Smith, it's about $100,000 in equity, chapter 13, 14 months.
So 14 months is probably the correct guideline. There's a few other catches, but most of them start at 12, so that's good news. So if you've been paying it for 14 months, on time, never late, that's super important.
Yes.
And then no other debts that are late, because I've had people go, hey, since my chapter 13, I've only got 3 lates in the last year. Like, yeah, we know that you did not do good with that debt, and now that they gave you a chance to start over, you're doing good with the new debt. Yeah, that's not going to work. That doesn't line up. So as long as you're paying your bills on time and you have $100K in equity, might be able to do that, Victoria.
Yep.
Might be able to be it. Yeah, it sounds like you're right on it.
All right, TikTokers, give us the love, give us the hearts. We need to get to 10,000. We haven't even broke 1,000 yet, guys. We must suck.
Oh, Maddie Boo!
Back in the
Thank
house.
you, guys. I'll be reaching out. Apparently, I don't qualify because my income was max. Ooh.
More
now
good
there's
news for
something. Yeah, there's some more good news for you. There's some really good news. The program that he's talking about, there's no max, right?
No.
There is no max on this program. But what you're talking about is income qualified down payment assistance programs. And income qualified, most of them are income qualified. But like where we do most of our loans in Los Angeles, San Bernardino, Inland Empire, the cap is $188,000. So when people are like, hey, I make $300,000 a year, those people aren't usually looking for down payment assistance programs because they got $50K in this account, $200K in this account. They're making $300,000 a year. Mm-hmm. But the cap, I like the primary one that I'm thinking of is 44 low, 188 high. I think that's what it is. 44 low, 188 high. So you have to fit within this range. What you just said is you cap the range, but that's going to be the range for wherever you're at. And based on the program, different programs have different caps.
Yes.
Like if I went platinum, that's a different cap. If I went Calhafa, that's a different cap. If I went sapphire, if I went Shadap. Thank you.
This guy.
Dude. Anyway, yeah, so different caps, but the one that NAF put out, no cap, because it's their money. They get to do whatever they want with it.
What? That's awesome.
Yeah.
All right. So, Emma, maybe if I buy him a new wardrobe, then
And some beef jerky. Yeah, hey, Emma, we are pulling for you. Emma, you're gonna have a special place in our heart so that when we get you a house, we're gonna be like, hey, Emma worked on this thing. Yeah, she used all the things at her fingertips in order to make sure she got this house. That's what we tell people.
You know
if
what
you
I
got
really
it, use
want
it.
right
No.
now? You know what I really want right
Beef
now?
jerky.
I want that too, but a square tip shovel.
All right.
It's on my want list.
Okay.
I want stuff too. Matty Boo, if I get approved for 400,000 and I see a house for 350 or so, can I use the rest for renovations?
Matty Boo. Hate to
Matty
tell you this.
Boo.
Hate to tell you this. It's going to be bad news. It's going to be bad news. Probably not. Small window where you could. Here's the window. Okay? We go in and we say, hey, listen, I want to renovate. I want to fix that roof. That roof's going to cost me 10 grand. What? 10 grand for a roof? That's cheap. I don't think you can get a roof for 10 grand anymore. But anyway, I want to put 10 grand into that roof for the renovation. Cool. Then we're going to have to offer with the roof in correction inside of it, and it has to appraise. If we offer with the corrections inside of it and it appraises, probably yes. But if you're like, hey, I just want to do an add-on as soon as I'm there and I'll take that extra 50 grand and put another room on it, probably not. Probably not. It has to appraise because the bank will only lend on Fannie Mae, Freddie Mac, FHA, VA, USDA, and a few others to appraisal amount, not to what you hope or what you qualified through income. So it's a little different.
So, Mildred Diaz, you hit it on the nose, man.
Yes, it's foundation.
Yeah.
Foundation's bad news. It's very bad news.
Yeah, don't
it's
worry
not,
about that clear to close.
It's not small bad news. It's very bad news, which means I was right. Ha!
Well, it was a good guess.
All right.
It was
No, I was
very-
right.
it's
No,
a
I was
very,
right.
very,
It's all right. You can say it.
very
They know. Everybody
good
knows.
guess.
They know.
Oh,
They
so
know.
if they know. They also know that
They
you
know.
have bad Anyway,
Yeah.
Emma, gonna use all my tact.
You, Emma.
I like your style.
We are pulling for you,
I
Emma.
like your-
we are
give you one of these?
Yeah, pull for you. Dude, thumbs up and one of those, dude.
Yeah.
You got
dude,
all of that. Yeah.
Here's what we need right now. We've got a lot of good people in here asking good questions, but I don't see the likes. Let's talk a little bit about CPI, the market, the interest rates,
Okay.
what we're predicting coming up, and should have pushed and buy right now. Is it even a good idea?
So, here, according to the chairman of the Federal Reserve, whose name is Jerome Powell, that's him right there. He's the one who kind of controls our economy. Thank you for the hearts. Thank you for the balloons. Thank you for
Yes.
everything. Facebook, Instagram, TikTok, and YouTube. According to the Federal Reserve, there are 12 members of the Federal Reserve. They're called the FOMC, Fair Open Markets Committee. There are 12 of them. Each one of these dots represents one of them. They are all in a consensus that our rate should be at 5.25 to 5.5. That's where they're at right now. But as you look forward into 2025, 2026, and even touching 2027, they are all in a consensus going downward. Some of them are a little higher, but when they get around 2026, 2027, they are in a consensus that the Fed funds rate will be at 2.5%. Wait, what are we at right now? 5.25 and 5.5. 5.25, 5.5. They are in a consensus that we will be at 2.5. What does that mean? That means that the people that control the economy are trying to make the interest rates go down, or they're predicting they're going to go down over the next 3 years. This is good news if you're a homeowner now, because your equity is going to skyrocket. That's good news. It's good news if you're qualified to buy right now, because as soon as this starts going down, buyers are going to flood into the market. Market prices are going to go up, and anybody who's in a house is going to gain equity. I could be wrong, but I'm usually not.
All you have to do, guys, is pay attention to what happened in 2020 and 2021. We were like this. Interest rates came down and values went And what was happening during these times, Lee, when people were shopping for a house while the interest rates were dropping, what was happening to the buyers?
The buyers were getting outbid all day, every day. Every day, they're like, "Hey, listen, there's a $400,000 house." I'm like, "How much are you gonna offer?" $390. No, don't do that. Don't do that. Do you understand the market? There's like 10 offers coming in. Yeah, but it's $390. It's close. Yeah, you're not even gonna get a counter. You're not even going to get a counter. I deal with realtors that are listing agents, high-powered listing agents. And I say, okay, so how was the weekend? They're like, oh, that was a pretty good weekend. We had about 30 buying units come in. I got 10 offers. 10 offers? No kidding? 10 offers. What are they at? She goes, typical, 3 below, 3 at, 3 above. I'm like, what are you going to do to 3 below? We're going to tell them thank you. Maybe we'll call them back. Probably not. But maybe. Why? Because they think they're smart and they're like, hey, I'll lowball them. I have money. No, when it's a seller's market, you can't do that. But you know when you can do it? Right now. Why? Because there's not a lot of buyers out there. People don't qualify. The ones that do, they run the roost. They own the show. The ones that, if you own property right now, this is a very good time to own property. If you own property. By the way, if you own property, you have people calling you all the time going, hey, would you like to sell your property? You know why? Because they think you're desperate and they want you to sell it low, but you're not going to sell it low. It's not going to happen. And as soon as the buyers start coming in, prices start going back up. Pretty simple.
Thank you for all the hearts. I don't know who's doing that, but thank you very much. I appreciate it.
Yeah,
Trying to get to 10,000. Thank you, thank you, thank you. Emma, good news for homeowners now. Bad news if you want a house. It's going to be competitive. Yes, 100%. I agree it's going to get bad. But between now and when they have that first interest rate actual drop, the actual Fed reduction, between now and then, it's a great time because, like he said, the buyers aren't entering in. Even those that are qualified. We qualify people on a daily basis that aren't shopping. They're just not because everyone has their own idea of what they want to do. But when that happens, the floodgates are going to open. Tons of people are going to come in to buy. But those that get a house, those that are actually out there shopping, they're going to participate in that equity increase. They are absolutely going to do that. Now, those that are like, well, I don't know if it's the right time to buy. I don't even know if I want to own a house. Well, let me ask you this. What if you bought a house right now, sat on it for a couple of years, and made yourself $250,000?
Can that happen?
It has happened.
Wait. How do you know it's happened?
Pay attention to 2020.
How do you know it's happened?
Well,
how do you even know?
You and I both participate in this. And a lot of the borrowers over here that I see that have got in the houses, great job, guys. You're making money.
But here's the one thing that you know for absolute certain. If you bought a house and you didn't sell that house, there's absolutely for certain you own a house.
and you get a tax write-off,
Yeah.
and you got shelter.
Yeah.
You don't have any rules. Unless
Right.
you have a piece of shit HOA like me.
Get appreciation.
But I'm happy. Maddie Boo, thank you for sharing the live. Thank you for the love. We appreciate it. So when it comes, let me talk a little bit more Maddie Boo's situation, guys. When it comes to down payment assistance programs, a lot of these are driven. There's a ton of programs out there, guys. Ton of programs. A lot of money out there if you qualify. And they're driven by the county and the city. I do not like these programs because they go off of something called AMI, which is Area Median Income, which means you have to fit in this box in order to participate in these programs because they're made predominantly for lower income. So they're trying to help those people. But the truth is, where interest rates are at and where home prices are at in most places in the nation, I think our nation average is in the 400,000. They don't even qualify for those homes. So those programs, to me, are a way for the government to say, we're helping everybody and we're putting people into homes. It's all BS if you ask me. But if you use bank programs like the ones that we have, they don't have those limitations, guys. They don't have those income stops. They don't have the credit stops. They don't have the things that stopping people from getting mortgages and getting some help. I want to put people in houses. Do I think that down payment assistance programs are fantastic and they're the best thing ever? No, I think they're appropriate for a select few. And I think down payment, regular traditional programs where you pay the down payment are appropriate for a select few. So I don't think that abusing them is a good idea. But if it's the difference between you being a homeowner and not a homeowner, I want to help you guys. And I think Lee does too.
I do want to help you. I will put you in a down payment assistance program. But here's the thing. I'm a little cynical. I actually look at what's the bigger picture, what's the motivating factor. And like, for instance, the big one that the loan officers are trying to push right now is called Dream for All. It's called Dream for All.
That was to the loan officers.
Oh, to the loan officers? For the ones that are pushing it. And here's, a lot of loan officers are naive. They really don't, they're just, a lot of them are naive. Some of them are very smart, but a lot of them are naive. Naive is not dumb. That's just you don't do the research and you don't know all the pieces of the program. But here's the real quick nutshell of Dream for All. It's real quick. Hey, listen, they're going to they're going to get you 20% down for your house. Whoa, 20% down, unheard of. 20% down sounds amazing. Now, all the loan officers who didn't do the research are like, hey, we got this program, 20% down, 20% down, 20% down, 20%. They're not lying. It is 20% down. It's 20% down. And then state of California says, hey, we're going to get you 20% down. So you go $500,000 house. You can buy a house in California. Most areas, 500 grand. Not most. Some areas, 500 grand. So 500 grand. Easy math. $100,000. State of California is going to get you 100 grand. They're going to get you 100 grand. 100 grand. That sounds amazing. No matter how if you put salt on it, still sounds like 100 grand. Put pepper on it, shit, put chili sauce on it, still sounds like 100 grand. 100 grand. They're going to get you 100 grand. Cool. You're like, hey, thank you, state of California. I'm buying my $500,000 house and I'm taking your 100 grand. State of California says, hey, you are welcome. And I'm really glad we bought a house. Yeah, I'm really glad we bought a house. All right, cool. Thank you. What do you mean we? What do you mean we? Yeah. What do you mean we bought a house, state of California?
Woo!
Oh yeah, that 100 grand that I got you. Yeah. I'm really happy to help you. We are now homeowners. I'm so happy to help you. We are homeowners today. Yes, sir. What do you mean we are homeowners? Oh, I want that 100 grand back. Wait a minute. You want the 100 grand back? Yeah. Duh. You think I'm just giving you 100 grand? Or you think I'm stupid? I'm the state of California. I need money. I want my 100 grand back. Well, all right, state of California. Thank you, I think. Oh, yeah. Oh, no, I'm not done with the terms. Not done. No. You know how most loans charge you interest? Yeah. Don't worry about that. No. Interest is chump change. In California, we appreciate very fast. I want shared appreciation. Yeah, so whenever we sell the house together, I want my piece of the appreciation. I want shared appreciation. So I want my 100 grand back. I want my shared appreciation. And one more thing, I'm first out. What do you mean you're first out? Well, if only one of us gets to be made whole, it's me. So, I'm very happy to help. We own a house in California now. Now, if you really understand this program, this is a very sophisticated way to screw people over, invest the state of California's money, guaranteed by real estate and houses, and they're going to make the appreciation. Holy shit. Yeah, but you know how it's sold?
We're going to help the Californians.
We're going to get you 20% down. It's a dream. It's a dream for all of you guys. It's a dream for all. It's a dream for all.
Well, here's
now,
the truth.
The loan officers that don't know, they're naively going, yeah, we're going to get you 20% down. Yeah, if you really don't know. Now, do I hate it entirely? No, I don't hate it entirely. If it's the difference between you not having a house and having a house, well, let's dance with the devil and get you the house. Let's do it. Let's do it. I will do it for you. But I'm going to give you the reality of what it is. I'm going to tell you what it actually is.
Well, here's the thing, guys. How on earth are we going to be able to get Gavin Newsom a new vineyard? This is how we're going to do it, guys. Buy houses and share the money with them. That's how.
Crazy, man.
Luna and Bagheera in the house.
What's up, Luna and Bagheera?
Appreciation is not as big on a townhouse than a home. Good idea to still be looking at them.
I'm going to argue with you just a little bit, Luna and Bagheera, because appreciation is kind of across the board. It's kind of all across the board. It is a little more difficult to realize in a townhome, a little bit more difficult because it's a specific segment of the market. But across the board, a rising tide brings up all ships, so the appreciation should be pretty close to the same. It's just that the market that you would sell it to is slimmer. You run into this with 55 communities too. 55 plus communities. Hey, listen, my house is appreciated, but I can't sell it to just anybody. So the segment of the market has a little bit thinner, but you still get good appreciation. So if it's what you want, do it. Yep. Yeah, absolutely.
Not just that, Luna and Bagheera, but you will participate in the appreciation, but you also own a home.
Yep.
You get a home to call your own, whether it's a townhome, a condo, a single-family residence, or a manufactured home, and we can finance all of them. So if we can put you into a home and you get to participate a little bit, that's great. If you get to participate a lot, that's great. Either way, you still own a home and you get all the benefits of home ownership.
Team Sanchez is in the house.
What's up, Team Sanchez?
Wife has been bugging me to check out that vineyard. Okay, so Team Sanchez, I got some stuff for you. First off, I think you're in San Diego. If I'm not mistaken, you're in San Diego. There's some wonderful wineries. Is it Fresno? Okay. Well, there's some wonderful wineries in Temecula. Okay? So there's some great wineries. We've been to a bunch of them. We go to a lot of realtor events, and some of them are they're really, really nice. In LA.
Okay.
No, this is going to apply for you, Team Sanchez. This is an amazing trip. It's an amazing trip. There's a train that you can hop on in the morning at like 10 in the morning, and you'll be in Northern California wine country by 4 o'clock. Taste wine and do whatever you drink it up. Have a good old time. Go to the beach, rent a boat, do whatever you're going to do. And then in the evening, it'll bring you back and you can rent a sleeping car.
Woo!
I did that where I went up there in just a regular seat, but I came back and I rented a sleeping car and I slept on the way back. It was a really wonderful experience, and you can drink all the wine you want. It's an amazing situation. So if your wife wants you to go taste some of those wineries, that's one of the best ways to do it if you live in Southern California.
And Team Sanchez, I'm going to recommend you take his advice and do that, but don't do what he did. Don't sleep on the way back, my man.
It was fun.
He's going with his wife. Have some fun, brother. That's a great suggestion. Yes, that's a good Valentine's gift.
Get banned again.
I'm okay with it. I'm banned in the USA. So that's a great suggestion. Yes, it is, Team Sanchez. I hope you enjoy your trip. I hope everything is good. What do you think? Are you ready to do this?
Well, dude, you just hinted that we're going to start at onlyloans.com. Onlyloans.com.
Yeah,
Only
Loan Daddy.
Only Loan Daddy. Let me get a look at that FICO.
Yeah, DTI looking good.
That DTI looking good.
LTV
You seen that FICO on that borrower over there? Shit, that's a
underwriting.
Oh my God. You know what? I think I'm gonna put her in my down payment assistance program. That's a program girl right there. That's a program girl. All right, cool. Hey, you know what? We appreciate you guys. We've been Christian Lee. We'll see you Monday.
Happy Friday, everyone.